Good morning, listeners, and welcome to the Trade Talk podcast. Today, it is quite surprising that the Singapore Nifty is up nominally. It is up just 30-35 points as compared to its previous close, even though all major events like CPI numbers, IIP numbers, Q3 numbers of technology giant Infosys, HCL Technologies, all these news flow came out with positive surprises, even though our markets are, I'm going to say, in the Singapore Nifty, it is up just 30-35 points. So we need to see that how actually our markets are going to span out today. And based on technicals, we are of the view that on Thursday, on the day of weekly expiry, when the market was down, it got arrested around 17,750, which was the crucial and important level for the market. So from there we saw recovery and it closed at 17,850, which is the equilibrium level of last few days. Today it is mandatory for the market to cross the level of 18,000, or in the future also we need to see that whether the Nifty is sustaining above the mark of 18,000 or not. In the absence of that, we are going to see downward activity in the market, or it will remain within the range of 17,750 and 18,000. However, on the dismissal of 17,750, we can expect market to fall to the next level of 17,500 or 17,300. On the higher side, above 18,000, the market will try to move towards the levels of 18,200 or 270. So the real breakout will come only on the dismissal of 17,270 or 300 levels, and on the downside 17,750 is the level which is very nearby. For the Bank Nifty, there also we saw some recovery towards the end on Thursday, but there also we need to see that whether the Bank Nifty manages to sustain above the mark of 41,800 or not, and above 42,400, or to be very precise 42,500 is the level above which we can expect Bank Nifty to move toward 43,000. So broadly the markets are still within the range, and after this particular news flow we need to see that how the market now going to span out from here. FIs are consistently selling in the market, but our currency, which was around some 83 levels, was around 8150 yesterday, and dollar index closed below the mark of 103. It was around 102.15, 102.30, which is a comfort zone for emerging markets. 10-year bond yield also dropped below the mark of 3.50. It is at 3.44, and below 3.40 we can expect further more decline. So broadly we are of the view that all these macro factors are coming in the favor of emerging markets, but micro factors, I mean to say these quarterly numbers, are now going to set the sentiment of the market, and that's the reason markets are trading within the narrow trading range, and they are quite I can say they are cautious. So based on the overall outcome of the Q3 numbers, we can see some activity in the market, but with a very short term view we are of the view that 18,000 is the level which will decide the next trend for the market. That's all from my side. With this, I am ending today's morning podcast. Thank you and have a great day to all of you.